All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for August 11th, 2025. We are recording this at the new 4 p.m. Eastern Time, and this is episode number 489. And my name is David Cosmeter. I'm the creator of TimingResearch.com. And today's expert panel joining us are Peter Schultz, Geoff Bysshe, Wally Olopade, and the option professor is back to moderate. So I'm going to turn it over to him.
Okay, thanks, David, and welcome everybody. Peter, Jeff, and Wally. And we've had a little bit of a spotty day on a few different things, so we got plenty to talk about. But we've also had a fantastic 90 days from May to recent times, so we'll talk about that as well. But let's start out with the S&P 500. We have gone up into that 6,400 and change area a couple of times. Had a full moon on Sunday night, for those of you who care about that kind of stuff. And what do you think as far as where we're going to go from here? Let's start out with Peter. Peter, what are you thinking?
Yeah, thanks, Jim. I appreciate it. I don't trust this rally right here. I think ever since we were getting a little bit overbought when we had the big sell-off a couple of weeks ago, and then we're getting right back up to that old resistance level. The
Yeah.
market keeps narrowing, and I think in this case, it'll be something that creates a downdraft. Everybody will look at that piece of news, but it's really a little bit of an overinflated balloon looking for a pin. So I'm not normally bearish. Ever since mid-April, I've been super bullish. We made a ton of money on the way up. I just think it's time to get cautious. We've been doing bearish plays for the last couple of weeks, been doing really well on them. So the market shifted a little bit. I think people are kind of having an unjustified faith that the market and tech in particular will keep going up. So I think it's time to start switching gears.
Yeah. Does that look a little bit like a up flag, down pole kind of thing on that chart? A little bit, the way it's stepping and stepping and stepping, and then all of a sudden it gives you the down pole kind of thing, possibly. You know what I
Yeah,
mean?
yeah. You actually you kind of nailed it. It's sort of
Yeah.
the inverse of the bullish pattern we normally see.
Yeah.
And what I kind of like about these kind of charts is, you get a nice warning. It doesn't just crash and keep on going, not giving you a chance.
Right.
It's given us a nice rebound. If you got some bullish stocks that you've got some huge gains on, it's a good time to start taking some chips off the table. I think that's what the institutions are doing. I just read up a little bit just for this broadcast, and hedge funds have been net bearish for about the last 2, 3 weeks. They're selling everything they can. It's retail that's kind of driving the market up. And
Hmm.
it's the classic deal where, if you want to quantify it this way, the smart money is selling to the not so smart money. And I think that's kind of what's happening right here with this chart.
Yeah. Hey, Jeff, what's your take on what's happening now, and what's your outlook?
So I wouldn't disagree with any of that because I cannot completely understand the desire to get um, cautious. Can I show my screen for a second?
Sure, sure.
Yeah.
All you guys, when you're talking, you could use your own screen, which I'm sure has some details that are indigenous to you.
So
Yeah, you should be able to
there, you should be able to see my screen. I'm gonna
get
I'm
some
gonna
money.
just show
Oh yeah,
these are
we can
weekly these are
we can
weekly.
see we can see six screens actually.
Oh, you don't want to see all that.
Like I say, we got six charts going right here.
Oh, yeah, yeah, yeah. But that's not the right one. I want you to see screen
Or
two.
we could just focus on the one you're talking about. Are you talking about the cues here, or what do you
Yeah,
want to do?
you'll see when it comes up.
Okay.
Um, I do know what I'm doing here. Despite that, let me start over.
I should have kept my mouth shut, is what I should have done.
No, 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 no. I appreciate it. I thought I was showing you screen one, but I was showing you screen two. All right, there we go. So I'm showing you weekly charts here, and I've
Hmm.
got the SPY weekly in the upper left, the Qs in the upper right. And so um, the week before last, we had an outside week, bullish, bearish engulfing, and in the SPYs, and an even more ugly looking weekly chart pattern in the Qs. So the for that reason, it would be a natural conclusion to say, look, it's time for this market to probably take a break, which I would agree with. However, the way that I approach the market, that we approach the market at Market Gauge is that I tend to always have just kind of the line in the sand, and until we get and break that support level, I'm going to let the market keep going higher. And on a weekly chart basis, that line in the sand is that bearish engulfing weak low because it's convenient. But the flip side, and the reason that I wanted to show the charts was because if you get a really ugly looking bearish engulfing pattern, and I don't care if it's weekly or daily, and then you go right back up and take it out, it's often bullish. It's like you just trapped everybody going in the wrong direction. And I think that as much as there's good reasons for the market to roll over, it's also in a situation where it could just I hate to use the word, but melt up, um, because people will freak out if it goes higher. I don't think it's going to happen, but again, my line for that would be if the spies make a closing new high here, and the Qs make a closing new high. I don't mean by a tick. If we had closed at today's highs in the Qs, I would have been saying watch out for a melt up if the spies do the same thing. But the other thing that I told our trading room this morning, and then I'll pass the baton here, is that really the thing to watch is probably the equal weight RSP right here. Now these are weekly. I'm going to change them to the daily, and so the shortcut or the more precise way on the daily is this range on RSP. All right. If the markets are going to melt up, then RSP is going to have to at least go up. It's not going to have to make a new high. But if RSP drops below their low here on the 50 and we close below a prior day's low, then that's my formula for as much as I would like the market to keep going, a close below the prior day's low is a huge short-term red flag. And then I would say I agree with the sentiment that probably going to take a break here.
And your one of your points that makes sense is that when you get a sell-off down to 6,200 and then they go make a new high, it's not normal that they'd go and let all those people who shorted at the bottom get their money back.
It's so when 30 years ago, um, when my partner and I were working at a hedge fund, we were actually working on neural nets to predict certain patterns. And one of the patterns we focused on was bullish and bearish engulfing patterns. And one of the things that came out of that work that I did not expect at the time was that bearish engulfing patterns in bull markets are bullish when when they're almost immediately rejected. Now, I would use the same explanation you used just now, but I think also you've got bulls that who are fast money bulls that all get freaked out by it, and then they realize 24, 48, 72 hours later they were wrong, and they're back in. Or the people who shorted on the way up, and then it goes out to new highs and they get blown out. And I could justify it a number of different ways, but the math was bearish engulfing is bearish as long as you continue lower, but if you immediately reverse, it's actually a lot of times bullish.
Yeah. Hey, Wally, I know you like to follow the trends, which is generally a good idea, and we've certainly been trending very nicely for about 90 days. So, how do you see things right now, and what have you been up to?
Yes, let me see if I can share my screen. Is that okay?
Oh, yeah.
All right, let me just do that. All right, hopefully you guys can see my screen now. This is the SPY.
Yeah.
Very good. So here's how we've seen this. First and foremost, the drop that we had got filled. And so that's where my concern is that now that we filled this gap, could it start rolling over? And so that's something we're going to be watching for very, very closely. However, immediately after the drop, the green candle on August 8th is a bullish candlestick that typically dictates that or lets us know that we should expect a new all-time high, or at least we should expect a swing high. And so something similar to that would be what we saw over here on June 23rd when we had this bullish candle here. Very similar pattern. We call this a right side pattern, the right side candle, I should say. And so when this happens, typically what would happen is that we would take out the previous high. And so for that reason only, I say, okay, even if we're going to fall back and drop, then I would say we would at least touch this new all-time high. Now, whether that's a close above that or just a cent above that, and then it starts backing back down. So immediately, I'm not expecting the drop to take place, but I would expect that we at least touch the all-time high at the very minimum before we start heading back down. That's kind of like how I'm looking at this. And then going back to the weekly time frame, just like Geoff mentioned, this bearish engulfing signal didn't really get any confirmation. And usually when you don't have a bearish signal get confirmation, it's a way to let us know that, hey, things could go higher. So after this bearish engulfing, what we should have been seeing if this market was ready to go down was a continuation of that. We didn't get that. Instead, it rallied back higher. And Geoff actually showed on the QQQs how not only did it go higher, but it actually made new highs, so to speak. Okay. And so when I see stuff like that, I say, okay, yeah, yes, there was bearish signals, but these bearish signals didn't really confirm. So chances are we're going to go higher. And so my take on this is expect the market to go higher slightly, a little bit more. August, we are almost in the middle of August. So at best, we might have about another couple of weeks of the market going higher. And then September being a typical down month, we could start setting ourselves up for the reversal in the month of September. So I'm expecting no more than, this week at best, I would say, if we get anything higher. But to echo the same sentiment that my other two colleagues had is that eventually my expectation is that it's going to come back down.
Yeah. But right now, you don't really want to step in front of a freight train just because it had a weekday or something like that, right?
Exactly. And so, I'll probably watch this. I wouldn't say that I am ready to start going bullish on so many different stocks. However, if I do go bullish on stocks, these would be stocks that I'm planning on holding for about 3, 4, 5 months and stuff like that. But nothing necessarily immediate right now.
Can you up on your chart throw up IBM? Because it might be an example of how something that looks really, really good can turn.
Yeah, so if we look at the daily time frame on IBM, obviously we had this. This was earnings when it dropped really big on earnings, and so this is kind of like what we're talking about, where this was supposed to be a bullish signal on this green candle on July 28th, but there was no confirmation of that, and this is why I said whenever there's a bullish signal that doesn't get confirmation or a bearish signal that doesn't get confirmation, then things can go really, really, bad for it. So in this case, we had a bullish signal. Multiple bullish signals, by the way, but no confirmation of those multiple bullish signals. And so market kept on dropping. I do believe if we look on the bigger time frame, which is like the monthly time frame, you can see that things are not looking so good. And so that was a bearish Harami signal that took place, a huge bearish Harami signal, and immediately followed by confirmation. So even though the month is not over yet, chances are that, IBM is going to suffer a little bit before it starts rolling back around. But yeah, you can see this. And again, these are the kind of stuff that I'm talking about where, after you get your bearish engulfing signal, yes, this was a bullish, but it didn't take out half. And that's what we look for, making sure that any bearish signal, price does not take away half of that bearish engulfing signal. And so same like here, we had this bearish engulfing. Once it took out half of that level, market rallied higher. Over here, we had the bearish engulfing signal. If this is where half is, we didn't take that out. Things fell back down. So yeah, I look at this and say, understanding candlesticks and some of the dynamics of how it confirms whether it's going to go or fail is intriguing and something that people should know.
Yeah. And just shows an example of something that used to be almost 300 that now 230 and change, which means, if people decide to sell, there are so many people long if they all decide at the same time, the market maker will drop the bid to a very, very low price, a surprisingly low price for many people who obviously thought IBM had a pretty solid model there, you know?
That is a very good point that you make there. And honestly, it's one of those things where I'm watching this because again, if I have to be honest with you, I'll say, look, there's a trend line that we can draw and say, okay, could this be where things start? Let me see if I can draw this trend line. Could this be where things start slowing down and we might start getting that rebound back up again? So
Yeah, yeah, yeah.
maybe we might get something like that soon. I don't know, but I would like to see the reversal take place first. But considering the fact that we're heading into September, I'm worried that we might not see that until probably end of September, beginning of October.
Sure. Hey, Peter, do you watch the price of gold? Because I find it to be a little bit, shall we say, disorganized lately.
Yeah. Well, I do follow gold. We've got a really nice long position on Anglico Eagle, and we're selling. We've got a long call against it out to January, and we've been selling short-term calls against it whenever it kind of spikes.
Right. You
And
want to
so
put
that's
you want to put
that's
up the actual metal so people get an idea of how spastic it's been trading?
GLD.
Yeah, sure. Why not?
Well, yeah, maybe Wally could do that. He's got his charts up there
Oh,
already.
Wally, do you have the ability to put up a gold chart?
GLD. Yeah, so what's been going on lately with gold, as close as I can tell, is it's really
Is there any
react
time frame in particular you want?
One
just
year?
daily.
One
Yeah,
year? Yeah.
that's fine. So it seems, yeah, look at that
Wow.
gyration. I mean,
That
we have
looks like either distribution or accumulation, and we're going to know soon which one it is, right?
that's right. I mean, we had a quite an impressive run up this entire year
Hmm.
until basically, if you want to see it, it really peaked when the rest of the market was bottoming. And so as soon as the stock market started going straight up, I think a lot of money flowed from gold into the stock market. And then this gyration that you've seen lately, these peaks and troughs where it's really been going sideways, I think is really related to the dollar. So as the dollar gets strong, I mean, they're finally reacting the way they traditionally have, where
Yeah.
when the dollar gets strong, gold gets weak, and vice versa. And the dollar's had some nice runs lately, and then it suddenly reverses, and we see gold go back up again. So it makes gold difficult to trade. But if you're looking at this chart and you're just kind of shorting the peaks and buying the valleys, especially with options, short-term swing trades, you
Yeah.
can actually do pretty well. You can do pretty well on gold because as you can see, and actually you probably do this, Jim,
Hmm.
because you're an options trader, but you can see that the swings are enough to make some decent money.
Oh yeah,
Uh,
especially on short-term options, and they're
yeah,
liquid, and they're liquid too.
exactly. So we have a range from about 300, a ceiling around, I don't know, 317, 318.
Hmm.
And you don't have to, squeeze every single drop out of that washcloth. I mean, you can start shorting it around 315 and you can start buying it, just above 300 and you'll probably just do fine. It's been a great moneymaker in the last few months.
But it's not going to stay in this range forever. So I guess what I'm asking everybody is, what do they think the price of gold? Are we going to blow out the top and make new highs, or is it going to have a reversion to the mean? Because the AI automation is going to kill inflation.
Well, that's one theory. The U.S. government keeps borrowing. I mean, we've got a $37 trillion deficit right now, and the world is kind of looking for alternatives to the dollar. And I understand that stablecoins are going to create a demand for treasuries, and that's great. But in the meantime, we're going to see a lot of money flow into Bitcoin and good old-fashioned gold. So, I think it's got an underlying bid that will eventually drive it higher based on a weakening dollar.
Hmm. So the overall trend you think is still intact. This choppiness, will come and pass, and
Yeah, the
then
choppiness is just digestion, basically, of this
the
incredible
fundamentals
move
will
we
kick
saw in
in
the
again.
first 4 or 5 months.
I'm
Exactly.
with you. Hey, Jeff, how do you feel about the price of gold?
I'm going to show a chart uh, because I I have a personal bias against gold that I have to make sure I don't let get into my
Analysis.
analysis, both for myself and for others. Let me make sure you're seeing the right chart. Um, so We talked about this a couple weeks ago when I was on, and I won't repeat the whole conversation. Um, but I think that gold as an asset is one that tends to go up as a result of the markets generally feeling like there's some kind of systemic risk. To be kind of more blunt about it in black and white, the markets aren't black and white, but I don't think gold's really an inflation hedge. I think the relationship to the dollar is so often um, not there that it's hard to say that it's driven by that. But like everything in the markets, it's really never one thing. And I think the mistake that people make, and I made for a long time because my mentor was a big gold bug. So when I started in 1990, he kept telling me it was an inflation hedge. And ever since 1990, I've been saying, I don't know what the hell you're talking about, because none of that makes sense to me. But so I think the reason that gold has had this huge run, one is because central banks were buying, right? That's not a secret. And so that had a tailwind. But two, because the 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 system, like whether it was currencies, whether it was the pandemic, and then more recently, it in 2025, it was Trump. Um, Love him or hate him, he just brought chaos into the system. And that's what sunk the market in April. That's what made gold go ballistic because people didn't know what was going on. Yes, the dollar was getting hit too, so it looked like it was the dollar's fault. But if you step back and look at gold and ask yourself, is the market afraid of some kind of a systemic breakdown? That could be government debt, it could be inflation, it could be currency crisis. If that's true, gold's going higher. So on top of that, I look at the technicals, and one of the technicals, well, two primary technicals, 50 and 200-day moving average, nothing complicated there. And then a calendar range, which we look at in July, which are these this range here. It's basically the midpoint of the July or January month, carry those highs and lows across your chart, and they're incredibly insightful. And then a momentum indicator, right? So as I was saying, with the SPYs, what's my line in the sand? My line in the sand for gold is that if it comes down under this July low, it'll be under the 50-day moving average. And this momentum indicator down here, let's just focus on this one, is based on a 50 and 200. And if these are doing something different than up here, then it's bearish. So I've got the dots, which is the 1-day measure, under my 200-day momentum, but that's way ahead of what's going on here. The 50 is about to cross the 200. That's way ahead. So that's momentum telling you this thing's rolling over. So if I add all that up, the market has kind of gotten used to Trump. Um, Tariffs, in my opinion, not really a big deal anymore. Nobody cares. Market doesn't care about them. Big picture. So I'm not really sure outside of like a really big fear of the U.S. debt becoming a problem, which is a real issue. I'm not so sure that people are going to panic into gold, and so it might keep going because central banks keep buying, and it's its trend is great, but not sure how much higher it's going to go. I think the real risk here is that it breaks below 300, and people wonder how did it get from 300 to 250 in a week.
Hmm.
So, Geoff, I'm curious, what would be the fundamental backdrop where you'd see kind of a crash in gold?
Sentiment. That's
Just
it.
people don't feel like it's a hedge anymore.
I think I think gold is it's so volatile that literally I think the thing could go from 300 to 278 in 2 days because that's the 200-day moving average. It overshoots, so it goes to 250, and nothing will have changed fundamentally. It'll just
Except the
be
positioning.
it's just, yeah, I think, look, if this wasn't gold, this is why I said I have to kind of put my bias, like my personal vendetta against gold. Everybody, me being indoctrinated that this is an inflation hedge, and it just never, it's not an inflation hedge. It's only an inflation hedge when inflation is threatening a system, like a real system, like the the financial system. But most of the time, inflation isn't doing that. So if I were looking at this and this was a growth stock, I would be saying, man, this thing is going to explode higher. Except for the momentum, right? As long as if it goes to new highs, I think it explodes higher. With gold, I mean, maybe it does. The chart looks that way, but I think that the momentum's rolling over. The fundamentals, when I look, and I'm not a fundamentalist, like it's a big picture perspective that the world is not as chaotic as it was. Think about where we were in April. I mean, it wasn't just us and the tariffs. The whole world was like, what the hell is going on here? And that's when you start looking at gold and saying, Jesus, what can I buy? Where can I feel safe? And that's gold. And that's why gold goes ballistic. And
I just think with the central bank buying, I think dips, every one of these central banks has their own criteria and they all have their reasons for buying. And I think dips will be bought. We'll see. I mean,
I
we'll see
agree.
if you're
No, I would
right.
agree with that. Like,
Yeah.
but if gold goes to 250, is that a big move?
Well, percentage wise, it is. Yeah, it's huge.
If I look at this chart and it goes to 250, it
It's a
looks like a big
reversion to a mean.
it looks like a big ugly move, but on the big picture, that's where I would totally agree. Like central banks are going to be thrilled. They'll just keep buying it because that's what they've been doing. I don't have any insight into why, but it makes a lot of sense if you're kind of scared, and why wouldn't you be? So, but big picture, I think gold could come all the way down to this 200-day moving average, and it would still look good, and the world would be saying, "Well, I don't understand why this is happening," and I would be saying, "There's less fear in general."
You know,
Well, yeah, that's possible with a couple of wars perhaps getting resolved between Gaza and Ukraine. So, am I reading this chart right? Is the 200-day moving average at $278?
Yeah,
Okay. So that's not that big of a crash. I mean, 250 is dramatic, but
it
270,
sounds dramatic. Yeah,
well,
it
and
is
the
like
underlying per ounce, it's going to be $300, isn't it?
if
250.
once it goes under 300, I
Yeah.
don't think it. Again, I'm being a little extravagant. I don't think the fundamentals matter between 300 and 280. And if we go from 300 to 280, that 200, it's gold. It overshoots. It's going, it would go, my bet is it would get down to that 250 level just because that's what markets do. And because of this momentum, this, this going down like this is not good news.
Can I add something to that too?
Yeah.
Absolutely.
Well, Wally, I was going to turn it over to you and give us a rundown on your feelings on it.
Yeah.
You want to grab the charts back? You can put your chart up there on gold.
Okay. Yeah. Let me see if I can do that. Give me 1 second. Let's see. 1 second.
I think gold likes the fall, if I'm not mistaken. Is that?
Well, my history with it is the end of the calendar year and the beginning of the new year is the sweet spot for gold to do something major.
I
Gotcha.
think that's true. I'm going to take a look. I can show us a
So
chart.
here's what I would say.
Yeah.
Just zooming out a little bit bigger picture, looking at the monthly time frame. You see all those wicks on top of those candlesticks right there. Those are usually strong, strong resistance levels. So if you were to ask me, are there any chances that gold is going to go higher? I say gold will struggle big time. But I think like what Geoff said, he mentioned something when he said, if we break to new all-time highs, then we're gonna like take off like crazy. So I totally, totally agree with that. But in the event that this is like now what, 1, 2, 3, 4, fifth month now that we are showing these long wicks at the top of these candlesticks. Not a
Yeah.
good sign at all. Like it's
I
just
got you.
resistance after resistance for 5 straight months. And that's what we've been seeing on the daily
Mhm.
time frame, which seems so choppy. So that tells me whatever is going on fundamentally, they do not have enough confidence to get past those high levels, those resistance levels. So that just tells me, look, I won't even be concerned about gold going higher until they clear up whatever is going on. And we'll see that when we clear above that level. As far as the pullback, the first target, I would say, again, I think Geoff mentioned this too as well, when he was looking at some of the lows, like the lows of last month. Should we cross below the low, close below the lows of last month on any day, this month, next month, then my expectation is like we drop it down to 280 at the very first, which is the 10 simple moving average. And then maybe you go down to the 250, like you guys mentioned earlier. But I look at this and I say, look, there's no way I'm looking to go long on gold. I'm not expecting gold to go higher anytime soon, is the way I look at this, regardless of what I shouldn't say regardless, even though I don't know what the fundamentals are, my take is there's evidence that they do not want to push this price higher for whatever reason.
The price action is telling you rather than going through the supply demand numbers or something. Yeah.
Correct. It's just too hard. They've tried it multiple months in a row, and they cannot get past that level for whatever reason. So it just tells me, yeah, we're not going any higher anytime. So until we clear it, just like Geoff said, it's like we have to clear. If we break new all-time highs, and I mean a close above new all-time highs, then gold is going to skyrocket. But until then, I'm not expecting it.
Yeah, and you've seen these charts before, Wally, where the wicks are long like that, and that is historically been an exhaustion sign.
Absolutely. Even earlier this year, I can show you companies like Amazon. Notice how we had all these wicks going on over here. NVIDIA, notice that when NVIDIA started having 1, 2, 3, 4, it took a while for it to start heading higher. Apple, same things. When we start having all these wicks that are just sitting there at the top, it's there's a reason why it's not trying to go higher, and we need to be cautious of that. So me seeing gold now and just seeing that on that monthly time frame is okay, something bigger is taking place, and I don't expect it to go higher anytime. So until that level is cleared.
Mm-hmm.
So I have a question for the group then. Why is GDX finally getting its act together and breaking out? Because the miners look great.
It's been lagging. It's lagged for so long behind gold. I think people are starting to see some value there.
No, and the miners can make money at all different prices of gold. I mean, obviously, just like Chevron's gone up while oil went from 75 down to 64, but Chevron's gone from 170 up, 138 up to almost 160. So I think these companies can make money at different price levels of the underlying commodity.
For sure. For sure.
And in addition to that, I would say usually, because this is a monthly time frame, if you're saying it's breaking out right now, we need to wait to the end of the month because we could easily fall back before August is over. So I usually, when it comes to a monthly chart like this, I say, okay, let's wait until the end of the month to make that final conclusion because as big as that green candle might look right now, it could easily turn into a red candle by the end of 2 weeks from now.
That's right. So that's the candle that still has 2-3 weeks to go on it, huh?
Exactly.
Well, even if it didn't turn into a red candle, it could have an awful big wick on it, which kind of plays into your thesis on wicks. But
correct.
I think gold's pretty fascinating, but I think the relevant chart right now for the market is the Qs, and it's the narrowing of the market, right? There's so much of the market cap that is contained in about 10 stocks. And
but one thing they say, Peter, is that that's true, but it's also true 40% of S&P earnings come out of these companies, and also that these companies are a big part of these indexes. So these guys are making a ton of money, and on August 23rd or 26th or whatever, when NVIDIA announces their earnings, I mean, it could be a number that just blows people away.
That's a good point. That's a very good point.
But will it be, my concern is that it's a sell the news event. So even if it's great earnings, did you know that, I just read this morning that NVIDIA now makes up 8% of the S&P 500. So one single stock. So that is a record going back to, I don't know, I think 1981 or something. I mean, in fact, the second all-time record was held by Apple at 7% in 2023. So NVIDIA is just this massive. I mean,
Well, their revenues are 44 billion. The
no,
next guy, AMD, the next guy is at 7 billion. So,
right.
these guys have 95% of the market on something that trillions of dollars are going into. So comparing it to another stock is difficult because we are seeing something with this company that we have not seen on any company because there's not, I mean, there's not any company that has done that. And the amount of money going into AI, I was wondering this, I can't quantify it, but I'll bet you the money going into AI with this AI spend is like zillions of times more than went into .com.
It's true, but one of the things we've learned for all of us folks that have watched the markets for a long time
Yeah.
is that there's all these variables out there, and you think somebody has an unassailable position. Like I remember getting into Qualcomm in the summer of 1999 when the stock was about $34 a share. By January, the stock was over $1,000 a share. I mean that's the kind of run you don't forget, especially if you're an
Yeah.
options trader. A
Yeah.
handful of options turned you into a millionaire.
Yeah.
So so Nvidia right now it's just accepted common knowledge that they have this unassailable position. They've got the rights to print as much money as they want. And all I'm saying, and I'm not being a naysayer here, all I'm saying is there's all these variables where you don't know if somebody comes out with a quantum computing chip that makes Nvidia's chips obsolete. I mean, there's variables that come out of the thin air
Yeah,
that
that would be a risk. There's no doubt. Unfortunately, we're not getting a whole lot of tips that risk is coming anytime soon. That's the
might not
problem.
be this year, it might be next year, the year
Yeah,
after
yeah,
that.
yeah, yeah,
Saying that
yeah.
these things, these unassailable positions, do not last forever. They
Oh
never.
no, nothing lasts forever. That's for sure. The word transitory can be applied to everything.
Yeah.
But the thing is that when people say that these guys, are overpriced, their PE ratio is not that rich. They've got back orders. This is something that every company wants to get involved in. 99% of companies are using the AI. So this is a horse of a different color, absolutely. And it's something that will end at some point. But it's also quite possible we're still in the early innings because these guys are not backing off their AI spend. When
Well,
they back off
so
the AI spend, listen, if they back off the AI spend, and maybe it is coming because Microsoft and other companies are talking about renting capacity as opposed to buying capacity, which I am hearing to be the first sign that somebody's getting more moderate in how much money they want to throw at it.
right. So all of us here, to one extent or another, are technical traders. So look at any chart you want on NVIDIA, and for anybody here, does the chart not look overbought? And that doesn't mean that it can't go higher in the long run. But I just look at any time frame on NVIDIA, and does it not look overbought to anybody here?
It looks like it's too strong
I mean,
to
look at that.
sell and too high to buy. That's what it looks like.
Right.
It's a good way
Yeah,
to put
So,
it.
yeah.
that's a good analysis. Yeah, I
And
mean,
I
I'm
certainly
not
wouldn't want to
suggesting,
step in front of it, but I
no,
certainly
I'm
wouldn't.
not suggesting
I wouldn't
short.
start my buying campaign since I had an opportunity to do it at 90 and 100 and
Right.
110 and 120. Anyway,
Right. I mean, I'm not suggesting anybody short it. It might be
yeah.
the last thing you ever do on the planet. But I mean, I'm just looking at this chart. I mean, I don't know. Every other chart I've seen that looks like this is a reversal waiting to happen.
Yeah. And it might, like I say, you just don't know if it's going to be at 180 or if it's going to be at 245.
Sure. And I want to hear Wally's and Jeff's take on this. And I'm not trying to be a naysayer. I'm just looking at the
No,
chart.
you're stating the obvious, but you
Yeah,
can't
you
do
are
anything.
stating the obvious.
But you can't do anything with the obvious if it's too high to buy and too strong to sell. So
Right.
there's not much you can do with information of it's extended and it's overbought.
But here's the
Congratulations.
here's the point in a greater context.
Yeah,
If Nvidia reverses, it's my contention the market reverses. The S&P, the Qs reverse, and then the market reverses.
more than likely.
Yeah.
Yeah, more than likely. Well, let's move our subject over to energy, which is hanging on for dear life, and see if there's any values there. And because there's a couple of markets, sectors that are kind of very much on the defensive, energy and pharma. I just wanted to get from you guys if you think there's any value to these things. So you want to start out, Peter, and jump into the the energy market? Can you put up the crude oil or some kind of XLE or something like that?
Yeah, USO or XLE. Yeah, that looks a little bearish, doesn't it? Yeah, that
Yeah.
looks like a good short. And you know there's so many variables here, and it's tough to be a trader because you gotta pick the variable that actually works. So the big thing I think for energy right now is supply. So if there is some kind of an agreement that comes out of this Trump Putin meeting, Russia is such a big supplier. And they need the money so badly. If they start opening up the spigots, and if the world is able to buy their oil again, that's going to be a lot of supply coming on the market. So that's a downside risk in a market that's already headed lower.
Yeah, that's pretty much it. Do you see anything of value there, Geoff?
Um, so I like to trade things that are trending.
Well, how about we
And
put up Chevron then? Because our USO is not really one of the top. Chevron's one of the biggest company of them all, and that's trending.
which put up a
The
daily time
1 year,
frame.
yeah, the 1 year, yeah.
Yeah, so I would look at this and say, like, for me, whatever this time frame is, it's just in a big range.
Okay.
Like
This is the daily time frame.
Yeah.
yeah, that's daily, right?
Hmm.
Yeah, it's just it, that whole chart's in a big range. I'd much prefer to be in something that looks like Nvidia or
Yeah,
the
yeah, no,
market.
yeah,
And the oil chart, as you just put up, looks terrible.
right.
Pull up XLE,
Yeah,
and it looks terrible. Like when I say
yeah,
terrible, just yeah, if you want to trade it from where it is now back up to 90, okay. But if you look at it from going back to last October to now, it's just a mess. And in fact, I was going to say when you said let's talk about energy, well, what energy? Because
yeah.
now we have like there's this fossil fuel energy and when I look at all the
Nuclear.
charts
Yeah,
that have anything to do with oil, my thought is why bother?
yeah,
We're in an environment where we have this amazing technology situation. We have this amazing energy situation. If you are looking at energy in terms of nuclear or electric, the powering the grid, that's where all the excitement in energy is. All these oil related stuff, it just looks like, I don't know.
yeah. Well, the nuclear is the one that everyone seems to go. Let's skip over to Pharma and put up Novo Nordisk, Wally, and get an idea if you think that might be a value down here because it's certainly at a low price.
Is that for Jeff or is that for me?
No, it's for you. We've
Oh,
obviously we figured out that the energy is nobody's cup of tea. So let's see if this thing that's on sale is anybody's cup of tea.
gotcha. So usually I like to start over here on a monthly time frame, and that looks like disaster to me. But
Holy
let's see what the
cow.
weekly has to say. Yeah. So my take on this would be not yet. I
No.
don't see. I mean, okay. Let me rephrase that. From a candlestick perspective, and anybody who believes in candlesticks, which I do, we have what is called a bullish Harami signal. Bullish Harami signal lets you know that, hey, the previous downtrend should not continue any further. Okay. So if we take that at face value, then I would say, okay, we should not expect price to go lower than the Wix low, so which would be somewhere around here, 44, let's call it $45. So $45, we've kind of put a low. We've already set it low. So that's probably the good news about that. I would not expect price to go below that anytime soon, at least for, let's say, 3 to 6, maybe even 8 weeks from now. Chances are we would not go below that level. Okay. If we do, then it will be because something major happened that is beyond everybody's control, maybe a Trump announcement or something that we could not control. Other than that, this is telling me, okay, do not expect it to go any lower for at least the next 3 to 6, maybe 8 weeks. So that's the good news as far as that is concerned. The bad news or not so good news is it doesn't tell us how high it can go. So that's the only aspect. So could it go sideways and start being choppy? That's a possibility. But I would say, depending on what type of vehicle you use, selling, put options here might not be a bad idea at all because I'm not expecting to go lower than that level.
You feel like you have some kind of a floor down there.
Exactly. So it's
All right.
slowed down for now, and it could definitely slow down for at least 2, 3, maybe 6 weeks easy.
Peter, I was going to throw another stock at you called Alibaba. That thing is, if you want to take over the chart, put up Alibaba, or Wally put up some Alibaba there, and because it is kind of, if you use some kind of moving averages, it's kind of consolidating. Well, you can see it from this chart, and this consolidation looks to me like it's either going to blow out 125 and go on a run to fill that gap, or it's going to take out 115 and fill the other gap. So I just was trying to get an idea from you guys. And I think they have earnings on Friday. So what do you guys think of this Alibaba?
If you were to draw lines on this trend line, you'd see that it's in a sideways pennant pattern, which is kind of a compressing a spring.
Hey, Peter, do you want to put it on your chart so that you can see?
That's all right. We can
sure?
do it. Yeah, sure. And so I'd agree with you, Jim, that it's like compressing down and just sort of gathering energy for an explosion one way or the other. The problem is, especially with earnings, you don't know which way it's going to go. So also from an options perspective, the earnings premiums are so juiced before earnings, or excuse me, the premiums are so juiced before earnings, it's kind of hard to buy like a straddle or a strangle. So if I had to trade this and I had a gun to my head, I would probably do a debit spread on both sides of it. So do a debit spread at 125 and a debit spread at 115, like a 125, 130, and then a 115, 110. And then if you can make that work mathematically, if the numbers come out, it gives you a good chance to profit on an explosion.
Yeah, because it does look like it is coiled here, and there's good reasons to fill gaps on both sides, right?
Yeah, exactly. I just, I hate trading this kind of stuff because you just don't know. Earnings could be fantastic, but it doesn't hit the whisper number and the thing drops like a rock. Or earnings could be terrible, but they're not as bad as people thought they were, and it goes straight up. It's just really hard to game it.
Yeah. Geoff, do you ever watch any of the quantum computing stock? Because Rigetti has earnings this week. RGTI.
Oh, sure. Before we move away from this one, though,
Oh, okay, sure.
Wally, can you just put more time frame on the chart? Just not a weekly, but like, yeah. So the thing that's interesting about this chart to me, all the compression that you just mentioned, but if you look at the high from last October, right? That high, that's where we're compressing. And if you were to do a horizontal line, we're sitting right above that. And that to me, this is the reason I'm bringing it out is because
Oh, that's an interesting line.
I look at the highs before the highs. So that was the major high before the major high.
Okay.
And so often this level, that the definition of what I just described is an important level, either in terms of support or resistance. So I'm agreeing with everything you're saying. I just wanted to point that pattern out that if it didn't have earnings, which to me means it really could go, it's a coin toss which way it could go, and it definitely looks explosive. If this moves to the upside on the explosion, I think it looks particularly good because of the congestion around this horizontal line that's breaking to the upside. So,
yeah, the concern I would have on the downside is they did announce that they got out of this grocery business, which sounds like a loss to me. And if it was a loss that I read about, it's probably one that's going to appear on their quarterly earnings. So that would be the one thing that would make playing both sides of the coin here interesting to me because, like I say, it does look like a binary situation.
Hey, Jim, one thing I would say is you hit the hammer on the nail in the sense that we have a gap to the downside and we have a gap to the upside. So earnings is going to be very interesting because either it gaps up and goes into the gap at the top, or it's going to gap down and fill that gap at the bottom. But either way, one of those gaps, chances are very, very high earnings, one of those gaps are going to be filled.
Let's flip over to Rigetti while we have a couple moments here, and because again, uh, D Wave and Rigetti looked like they were trying to get their legs today, but
Look at that.
Yeah, so now you're talking. Like, forget about energy.
yeah,
Now you're talking.
Yeah, that's a trend.
This this is this looks explosive. I
Just so you
mean,
guys know, Rigetti has earnings tomorrow
yeah,
yeah, I
after the
was just
close.
gonna say with earnings, it could go in either direction. Um, but this is exactly the type of trade stock that I would be looking for right now. I would prefer that it didn't have the insane move that this had over there on the left. Um, and it was just a steadier trend, but that's okay. I'll take it. The fact that it has been trending higher, it broke out. You can't see the July range, but if you were to draw a parallel line from, I mean, sorry, a horizontal line from the high um, right in the middle of July, that's not the, I'll go back to the previous high. Nope, sorry, down this July 10th. Go to July 10th or 14th or of this year. That high right there. That horizontal line right there is your July high. So my recipe for the markets in every instrument right now is if you're above that level, which the markets are split on, and then you've just pulled back to it and now you're going higher again, that's a pattern that's bullish. And you know that you're wrong when you come back into the July range. If you go take out the July low, then we're bearish. That's what I said in the beginning about the markets.
hmm
And this has the bullish pattern that I'd be looking for. So
Can we look at quantum computing, QUBT? They also have earnings coming out here pretty quick.
that didn't look as good to me as the others,
Yeah, it had a
yeah,
little steeper
that's
pullback.
perfect.
but it
It's the
could be.
exact opposite of Rigetti.
Yeah.
The high from 3 or 4 days ago that's the July low. So if you carry that over to the left, it to the beginning of July, it's it broke down from that July low and it fell out of bed. Now it rallied back up to that level, can't get through it. If this thing goes lower, for all the reasons I liked Rigetti, I don't like this. And that's exactly the pattern you want to be watching out for. And so, Peter, when you're saying like the market's getting narrower, this
Mhm.
this is the like the stocks that are doing this in the environment when the markets are hitting highs. These are the ones that are going to get absolutely decimated if we have a sell-off, in my opinion. They're already being, sold.
Yeah, you bring up an interesting point, Jeff. Like when I go to decide I'm going to short, I don't take those skyrockets that we've seen in the past, the Nvidias, and short them. I always want to look for something that's already weak,
Exactly.
so that if the market rolls lower, I mean, it just drops like a rock. But even if it doesn't roll, like, okay, for instance, quantum here, this looks like it's going to trade lower no matter what the market does.
Agreed.
So that's what where you have like kind of all the odds on your side. Like if the market rolls over, great, the wind's at your back. But even if it doesn't, you're probably going to make money on the trade.
So I have a different take on that. I believe that this is actually going to go higher, and here's some of the reasons why I say that. If you look at, just even the recent trend right now, we can draw a trend line. If you're into trend line analysis, you can see that from here to here, we've had something like this, right? And the classic definition of a downtrend is lower highs, lower lows. So we've been making lower highs, lower lows, lower highs, lower lows, lower highs, higher low. And so as earnings is coming up, chances are very, very high. There's a reason why we didn't break this. Now, you know, I would say this, I'm willing to wait until after earnings announcement just to make sure. However, if earnings announcement comes out and this stock gaps up that morning, as soon as we're able to get into the market, my expectation is it's going higher.
Yeah.
And
Yeah,
So
my
so,
contention,
at seven. Go
my
on.
contention is you're not going to have to wait. You're going to know day after tomorrow because when Rigetti announces their earnings,
oh, I
it's
see what you say. I
it's going
see.
to directly affect quantum.
I got you. Okay,
If this downtrend line is broken decisively, and more importantly, the horizontal resistance line is broken decisively, I think you got the answer to your question
good point.
before they announce earnings.
Good point. I appreciate you sharing that. That's a very good point you just made.
Yeah, if you get above 1750, then you can get out under 1550, risk $2 and see how it goes.
Yeah,
Right.
Wally, I agree with you. It's going higher if it breaks that horizontal line,
Yeah.
but you're assuming it's going to go higher. Like it hasn't made a higher low yet, in my opinion. The low from 2 days ago, how do we know that's a low?
Not enough evidence.
You're right. I agree with you. And that's why I said I will wait until after earnings. And I
Yeah.
said, if on earnings day, this gaps up on earnings,
Yeah,
like one of
yeah,
those where
yeah.
it gaps up on earnings. I was okay, yeah, that's it. It's ready to take off. But I think it was Peter that mentioned the fact that, hey, you know what, you might not even have to wait to earnings because if Rigetti does what it should do, we
It
would
could go.
have an idea of what to expect.
All right. Hey, Peter.
Yes.
Yeah.
Peter, we're going to go around the horn now. Could you please give everyone a little idea of what wealth builders can do for them and any special offers you might have?
Yeah. Yes. So, what everybody looks for market edge. Everybody on this call has their own market edge, and our market edge is a probability. So we deal with options. Options are based on a mathematic formula. And the Black-Scholes model, they won the Nobel Prize for it, the mathematicians that discovered it in 1997, even though that it made the modern options market possible back in 73. But anyway, so we really believe in stacking the probability in your favor, and that's why we sell credit spreads. We sell them with an overwhelming probability of winning, 80% or better. And it's really refreshing for a lot of people because if you're kind of used to a lot of hit and miss in your trading, you really get used to winning a lot. And if you want to know how this works, I've got a really short video that just explains it in a way that anybody can understand, and that's at optionssuccess.com. We also have a free options trading course. So it's optionssuccess.com. Go take a look. Just watch the video. I think you'll be entertained and I think it'll make sense to you. And it's also a really passive way to trade. So you don't have to get in and out at the exact right moment. So anyway, yeah, go ahead and take a
Okay.
look. I appreciate you being on the call.
Perfect. Hey, Geoff, Market Gauge, can you explain how you're going to help people by going over there?
Yeah, sure. And I'm gonna show my screen for a second. That just kind of illustrates what I've been talking about because so we also try to look at certain edges that are specific to what we do. A couple of those are these ranges, July ranges, January ranges. They're really easy once you understand them. So right now, that's definitely a focus because the July range and earnings season represents a really easy way to know whether or not you should be bullish or bearish. And so I do a live mentoring every morning from 9 to 10:30 or 11. We go over stocks, how we look at the markets. And I've got two partners. We've all been in the markets since 70s, 80s, and 90s for me, respectively. Um, so we've got some unique indicators, and we have strategies that are for discretionary traders, and we also have automated strategies, algorithmic strategies that are used by individuals as well as RIAs. An easy way to get involved with us right now is just to kind of sign up for the newsletter that we put out on the weekends. If you go to marketgauge.com/perspective, you'll be able to just opt right into that. If you go to marketgauge.com, you can also go to, our free newsletters sections under Market Beat and just sign up on one of the pages as well. That would be the easiest way. And if you do that, you might even get notified to a webinar that I'm doing this Thursday.
Okay, perfect. Hey, Wally, can you fill us in on what's going on at Right Side Trading and how you're going to help people?
Absolutely. Actually, tonight at 8 o'clock, for anybody who's interested in joining, you can come join us. Just send me an email at info@rightsideTrading. You can see that right there at the bottom of the screen, info@rightsideTrading.com. If you send me an email, just say tonight's webinar. I will let you in for free so you can come observe us. We will be talking about, and we do this every Monday night, but we just talk about stocks that we find at low discounted prices. We're more stock traders and investors holding on to them. And so companies like, and I don't know if anybody's looked into this, but one of the ones that we're talking about a lot, which we're going to be analyzing tonight, would be home builders and how they are beginning to set up for a huge run to the upside. And so if you come join us, just if you want to join us, it's totally free for tonight. And contact us at info@rightsidetrading.com. Just say, tonight's webinar, can I get access to it? We'll let you in. If you're not able to attend live and you still send us the email, we'll send you a recorded of tonight's webinar.
Okay, thanks a lot, Wally. And of course, thank you, Peter and Geoff. Good conversation. We'll have another one, of course, and everyone should try to take advantage of the information you can offer. I'm going to sign it back off to David, and of course, I'm going to be here for a meeting after this meeting. So anybody who'd like to look into how I operate with the options and how I try to help people with options, hang around. Otherwise, it's back to David.
All right. Thanks, guys. Great discussion.
Thank you, guys. Appreciate you.
Yep.
Yeah, thank you for having me.
Thanks, guys. All right. Yeah, so just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube or Substack or your favorite podcast app, or you can just go to TimingResearch.com and this post will become the archive for today as soon as I can get it processed. Also, as Jim, the option professor, mentioned, for those of you in the live room, stick around and we'll have a bonus session. Or if you're watching the archive, that bonus session will be a separate video. It will also be listed on this post when I get things processed afterwards. So, all right. Thanks, everyone. I just want to thank my panel again for tonight. Peter Schultz of wealthbuilderpublishing.com, Geoff Bysshe of marketgauge.com, Wally Olopade of rightsidetrading.com, and Jim, the option professor of optionprofessor.com. Thanks, everyone.
Thanks, David.